Hey everyone, thanks for tuning in to another video. I wanted to make a very simplified video to give you clarity when it comes to trading. The whole idea behind this is to show you who's in control, show you what's a strong level, show you what a weak level is, and how to combine that with supply and demand to show you what the higher time frame is doing and how to get good entries. I think that a lot of people get mixed up. I've done a couple videos already on market structure that really go into depth of all of this stuff. Now, if you haven't watched them, I recommend you watch them. I also have a lot of cheat sheets that I've developed when it comes to especially market structure. I have a couple already. And so if you haven't already checked those out, check my previous videos in the descriptions. I have them. Check my Discord. It's free forever. You can just click the link in the description. You can get all those cheat sheets as well as the one that I'm making right now that is going to be used in this video. So this video, it's going to really open your eyes. I hope that it really helps because I know that this helped me once I was able to master this. And so I decided to make a video solely on this topic. And I think that you have a lot you're going to be able to gain from this video. So if you have questions, leave me a comment or send me a message in my Discord and I'll get back to you to clarify exactly what maybe your question might be about. So the idea behind this is when we're trading, no matter what's happening, price can be really noisy, but we're always going to have one side that's going to be stronger than the other. And that strong direction that we're moving into, or we're moving from, the strong levels are going to be what's holding. That's going to be what's targeting the opposing side, and that's going to be the higher time frame trend. And so this is going to really help you to understand what side you're trading on so you avoid getting into traps. I'm going to show you a couple examples with some confirmation style entries, some with some risk entries, but this video is overall going to be very simplified. This is the basis of how I trade and how I catch my trades, and all I'm doing is I'm trying to make it a little bit more easy to understand. I'm not complicating it with a bunch of different time frames. I'm not complicating it with all these different time frames and refinements. We're just keeping it simple. 4 hour, 15-minute, that's it. So let's get into it. First thing you want to know is what makes an area strong. You see there's a lot of labels on my chart about strong levels and weak levels. Well, a strong level is basically an area that breaks structure in the higher time frame trend, right? So any level, whatever the trend is at that moment, is going to be whatever is being broken. So if we are bearish, we're going to break the lows and continue making new lows, right? If we're bullish, we're taking the highs and making new highs. So an area that's strong will break structure. The other thing is price will respect a strong area of structure because it has no reason to violate it, because it's basically the area where the orders were initiated to break structure, right? Now, to make an area strong means that that area is in line with the expectation of order flow. That means that we are bullish until we come to a higher time frame supply, let's say to give a reversal, right? And we are bearish until we come into a higher time frame demand that gives that reversal. And so it's very important to already understand what the higher time frame story is. There's other videos on that I've made. This video will show you some examples of that. Now, when an area is strong and takes out another strong level that was not expected to be taken, that leaves behind what we call a reversal point. And that's what these are marked throughout the chart. Every time that we get a reversal, we have a reversal point, and I'll get into that. Now, areas that are weak. Well, when price wicks through a point of interest, right, usually that's showing a little bit of weakness. Now, sweeps, usually we'll trade in the opposite direction of the sweep, right? Or we'll trade away from sweeps. But when you see that we wick through an area that's showing a little bit of weakness, now I tend to prefer to use candle body closures as confirmation. So for me, if I see a sweep or I see a wick through a point of interest, I'm going to go on a lower time frame to see what might be happening, because more than likely we could invalidate that level. Now, a violation is a wick through a strong point of interest, but an invalidation is always going to be, for me, a candle body closure above or below whatever the violates, that breaks that strong point of interest, right? Now, the expectation of order flow fails. So an area that's weak is basically, in this case, will only happen through reversals. Now, 99% of trading is continuation, and it's like 1% reversals. We only have reversals at one end of the swing, right? So if we are on the higher time frame, let's say we have this low to this high, break structure to downside, we only get a reversal at the end points. This is the reversal. After that, all of this is continuation. Now in a lower time frame, there'll be reversals, but we only have 2 reversal points at the sides of every swing. So if this was one bearish swing, this is where we got the reversal from bullish to bearish right here. Point of reversal where the higher time frame shifted bearish and began targeting strong demands, and created strong supplies. As a result, here's the same thing. The point of reversal where the higher time frame shifted bullish and began targeting strong supplies and created strong demands. Now in this case, because this is higher time frame bearish order flow, if you look at this tip that I have here, if the higher time frame is bearish, we'll look for a premium supply that might trigger a price reversal from its temporary corrective pullback to continue the higher time frame intentions. Now, there's more details on that in my market structure video, but if we're overall supply, right, same thing as these lower time frame swings, right, but this is one massive swing, where we should continue to break structure to downside, and that's what happens, right? Break structure to downside. This is only going to give a corrective pullback until we tap a valid supply above, in my case, when I say premium, that means above the 50% of the swing. So this is the 50%. We tapped through that. We tapped the supply on the left, somewhere on the lower time frame, and that's when we got the reversal, right? Same thing here. Let's say this high to this low, that's one swing. The idea is we come into a premium above 50% to take price lower. If we're bearish, or if we're bullish, we're coming into discount territory, which is the lower 50%, right? That's another part of market structure video. You can look at that somewhere else in my other videos, but that's just the idea behind it. Now, if the higher time frame is bullish, we're looking for a discount demand to trigger a price reversal from its temporary corrective pullback to continue the higher time frame intention. Just keep that in mind, right? So let's see. We're going to define strong and weak areas. We already did that actually. Let's go into the steps to follow. So what I'm going to do is I'm going to hide what all the stuff is on the chart, all the noise, just to give you a simple example of what exactly I mean. So let's just say we're going to pick a random part on the chart. So look for an area that got ran through. So like, for example, here you can see that this low was, we ran through that low. This did what? It gave a pullback. This pullback did not break structure to the upside. It just gave a pullback. We didn't see price reversal. So what this tells me is identify a point of weakness. Those I think are easier to find. This is a point of weakness. I'm going to label it as such. That's a weak bottom, right? It's on the bottom. Let's look for another level. If we look to the left here, this is a bottom that got ran through, right? Even though it's a wick, we're going to go from the outside of the wick. This is a weak bottom, right? Let's find another point of weakness now that's from the bullish side. So here would actually be a good example. This area broke structure downside. This is a strong level, but then it got ran through. So for some reason, you could also say that this is a reversed area. So this area, while we could say is a strong level because it broke structure, it also got violated. So technically, we're going to say strong top, right? But once it got reversed, what do we see? Now this became a weak top, right? Or targeted. So we're going to label that now as a weak top. And what's a strong bottom in this case? The opposite. We could say this area. We could also say that this area is a strong level as these contributed to that break, right? Strong bottom, just trying to give you ideas of areas that, you know, got ran through. Now, just because it's weak doesn't mean it could be strong. Just because it's strong doesn't mean it can be weak. It can flip, and that's what we're going to go over, right? So identify some weak levels. Let's see another one. This one, price pushed up, came down, gave a pullback. This high didn't break structure to the downside. It got ran through. So this is a weak top, right? In this case, weak top. Once we identify the point of weakness, let's identify the point of strength. What ran through this level? Where did from this level pull back to that broke that level? Has to be from a pullback. So we can go like this. This is technically a strong top. This one created the run through this area, and this was the extreme. For right now, we're only going to label extremes. This weak what this weak bottom was ran through. This is bearish, right? So what does a bearish look like? The strong is above. We make that low, we pull back, and then that pull back, when it continues, it breaks that structure. So pull back, this is the extreme of that level. This one created the run through, strong top, right? So when we're bearish, the tops are strong. Now in this case, to the left, we already kind of labeled, this area was strong as it broke, right? We had a pullback from here. So this area was weak bottom. This area created the break of structure to the downside, so this was strong. Then this area did what? It failed to get taken, so the expectation was this would be weak, right? But when we see that price reversed, we now have this considered, this area is now no longer strong and now it's weak. We ran through it, so now the area that caused that run through is strong. So this one was strong, right? Same thing with this level, this was ran through. What gave that break? Here we have this area strong. That's the pullback. Price continues up, corrective pullback, break of structure to the upside. This area is the point of strength, right? This is the point of weakness, right? So hopefully that gives you some ideas. A lot of times what I'll do is I might just, let's say, circle a strong point, because I could look for pullbacks of price to come back to those levels. And we could say, like, these are some strong levels, right? That's the whole principle behind this. Let's get rid of those. And here you can see these examples. Once again, this is what we're going to basically be building. So weak, and when we're bearish, the high is strong, break structure. Pull back, the high is strong, break structure to the downside. When we're bullish, opposite, right? Break structure to the upside, we get a pull back. That pullback fails to take out the low. And what do we get? More continuation, breaks the highs, the weak, the targets, right? So one side's going to be strong, one side's going to be weak until we get the reversal point. So now that when we have the point of strength, now we're going to identify areas of high volume continuation. High volume continuation areas are going to be areas that usually leave behind imbalance, that are pretty strong, meaning that we see that there's almost no resistance here. We get very long bodies, in this case, that are pushing, that break structure. So high volume continuation, that means that usually there's going to be a supply above here, or a demand that causes that area. So for example here, high volume continuation to the upside. You can see these bodies are pushing upwards with very little resistance. And that's what's going to show us that that area, the reversal point, right, or the continuation point, in this case this strong level that broke structure to the upside, did so with a lot of power and momentum. So we know that that area that's the extreme, that point is going to be very important to be watching. Once a continuation fails, we identify a point of reversal. We have these reversal points. As you already kind of saw, this is where we have price shift, right, from the higher time frame order flow. This is where we begin shifting. And you can see that the volume follows now in line with bearish, same as up here. When we shift, you can see the volume and momentum are now favoring bullish. It's quite powerful. We leave behind what? A lot of long bodies that are full-bodied and that break structure, right? And then once we begin getting indications that we're shifting again, now we have, look at this. Volume and momentum are favoring shorts. Very long bodies that are pushing lower. So this is what you're looking for. Identify point of weakness, right? Once again, we're going to do one more here. Let's pick this one. So let's go somewhere here, random. Let's do this. This one's bullish. Let's just, I guess, go back to the original here, right? So anyways, this is a point of weakness that got ran through. Weak bottom. We identify the point, the extreme that caused the break. This is going to be the strong level. And we want to confirm, based on high volume continuation through here, that basically this supply right here is what caused the break of structure to the downside, right? And so we're bearish. You can see high volume is confirmed here, high momentum is confirmed, and until we get a reversal, the reversal would then take out the strong level. We would expect continuation until we get our first strong level broken, right? So now let's get into the specific examples of current price. So now what we're going to do is we're going to start to the left. So this is the first level we're focusing on. This is the first reversal point. Then we're going to focus on these 3 legs here. So for right now, we're going to remove the higher time frame order flow. It might be helpful, but we don't really need that for right now. So when we identify what? Once continuation fails, we identify point of reversal. This strong level that broke structure to downside, the expectation is what? Well, the continuation would be telling us that the lows are going to continue to be weak. And so if that is true, the bottom is weak. And what can we expect? We can expect that price is pulling back into the supply and likely will create what? That pullback should continue, and what we would expect is this to happen. Price would break structure to downside and then get another pullback and then another break of structure to downside, right? That's the expectation. This is the area where it fails. So supply is reacted to, we form an extreme, and then we break that strong level. So at that point, now what do we have? Let's mark this out. It's demand, strong bullish. Now we have a reversal, and so now we're looking for what? Now that we're continuing bullish potentially, now the lows are going to be strong and the highs are going to be targeted. So now this area became targeted, and it was targeted as a result of this area being strong. So now, let's clean this up here. Now what we have is strong levels that are breaking, and these are going to leave behind bullish demand areas. Demand in this case, what I like to mark out, it's the candle beat that gets engulfed. So it would be a sell to buy, and the buy is engulfing the sell, right? And you remember, we like to look for high volume and momentum to follow after that happens. And so let's say this area, this is where we get a pullback. This pullback is what breaks that strong structure. This is confirming now a reversal that's bullish. So this demand breaks structure to the upside. We get continuation to the upside, and then we get a pullback. In my case, I like to look for a pullback. I don't take candles that are continuously higher, as if the previous candle is lower and we're continuing making higher candles, there's no pullback for me until we get a sweep at least. So in this case, you can see this pullback here swept all the structure internally here. And so that's when we get that continuation. Same thing, price pauses, it's very rounded in this correction, pulls back, we swept all of this, we formed this low, and this is what targeted the weak high. And so every time that we're doing this, we're basically creating a new target. So we pull back, this area was weak, and you can label it as such. That's a weak top. Now what do we get? Continuation to the upside. What do we have? A pullback. Strong demand breaks the weak top. Continuation. When do we get another pullback? Here we have a pullback. Pulls back. Strong demand. This is where we get a reaction for continuation. Break structure to the upside again. Right? And then what do we have happen? Now this strong level is going to be violated as a result of this point of interest. So this area was the extreme. And then now what do we have? A break of structure to the downside. The first demand is now broken. Now this can be on any time frame, you can use this. We're using the flower because it's a little bit more smooth. But now that this demand is gone and violated with a what? It's weak now. We got a candle body closure that violated this area. It invalidated the demand. So now that tells us what? The extreme that caused that is a point of reversal. This is where price shifted bearish. And so now areas that were strong are now going to be what? They're going to be considered targeted. Now, if the higher time frame order flow, if the expectational order flow is bearish, that tells us what? That we're going to take out even the last demand because we have to form a new low, right? And that means that what we're going to bring, when we get a pullback after we take out the low, that pullback is going to be what? It's going to be a lower high, right, to this high. And then what? We make a lower low, and the expectation is what? Lower high, right? Same thing. So now that these areas are going to be targeted, what we want to find out is what are the strong levels that cause the breaks. So we could say, for example, well, one would be this. So this area is where we get a pullback that breaks structure to the downside. That's the extreme. Now remember, we're just writing the extremes. So strong top there. Then what do we have? We pull back after this area here, right? Maybe even this one you could even say, potentially, right? This one breaks structure to the downside, takes out this one. We get a pullback. This is another strong level, breaks structure to the downside, pull back, break structure to the downside, because all the weak levels that we're targeting are these, right? This is now a what? A weak bottom. The expectation is because we're going to break it, right? Now, if you remember in the notes here, if the higher time frame is bearish, right, what are we looking for? Higher time frame is bearish. We're looking for a premium supply to trigger a price reversal from its temporary corrective pullback to continue higher time frame intentions. Premium supply. So when we're pulling back up into this area, we don't have to take out all these levels to get continuation, right? In this case, what we would expect is, because we know that we're forming what? A lower high, and the expectation is what? A lower low. We know that all of these levels have to go. So we're not expecting a reversal from any one of these points. We're not expecting to see this happen, right? Because we're expecting a lower low, right? Now, if we were not expecting that to happen, what we would expect is, let's say if we're bullish, we might get what? Price to come into one of these areas and then provide a reversal, because now we're bullish, right? But because the higher time frame story is telling us a lower low is expected, we know that all of this area of demand is going to be taken out. Now, because what? The higher time frame is bearish, that means that on the pullback, we're not going to take out all of these levels. We actually are going to come back to respect one of them, right? And so then we're going to continue to take out a new low, right? Same thing. So we don't have to take out all the levels unless that is in line with the higher time frame. That's important to remember. So these areas are strong. They're taking out those weak levels. Now I have them already labeled, so we're going to use those. We're going to mark out the strong supply, strong bearish, right? So these are all the strong levels identified that broke structure, and they're leaving behind what? Supply. Those supplies should be respected. Once again, I'm using the candle that gets engulfed. So an engulfing candle is one candle that basically engulfs or eats the entire previous candle with its wicks in entirety. So in this case here, you can see this is a buy to sell engulfing. The sell candle, the entire candle eats the entire candle body, even with wicks. And that's the important thing to note, right? So remember that there's volume along with that continuation. And that's one of the important steps. We need to make sure that we see that, right? So we're leaving behind strong supply. And so we continue this. This is one big swing. We don't get any pullbacks until we make this low. Then we get this pullback, and this is where we make the new low. What happens here is this ends up becoming a reversal point. We don't know that until what? This extreme causes this to break. Now you might think, wow, this is a pretty long leg. You know, could I maybe make an extra leg in here? Maybe you could, right? But it would be maybe a little bit more confusing if you started looking for stuff like that. I will only prefer to get levels that are extremely clean. And so these areas, you can see very clean that we're having pullbacks from. It's very clean, the pullback that we're seeing. When price starts to get a little noisy, I will only select the area that's responsible for breaking structure. And that's why I'm using these levels. Did I use this one? No. While this area did break internal structure here, all that this did was come deeper into this demand level. What area broke the demand level? Technically, this supply broke it. The following candle, we get a candle body closure just below right here, the second one. So for me, this area is what's responsible for the break, and that's why it's strong, right? Now, higher time frame order flow. Once again, you can kind of see what our expectation is. The bearish is going to leave behind strong highs, and the supplies are going to be on the highs that break the lows. Demand is going to leave strong lows that are going to then shift. Strong levels will then be targeted when price reverses, right? Now what are we expecting? So supply is taken out. It's invalidated, point of reversal. So let's see. Next one would be example 3. These are a lot of examples. These are going to be more corrective. So now let's get into this area of price. So what I'm going to do is I'm going to hide the previous ones so they're not confusing. We'll hide that one. We're going to hide the bullish zones here. Reversal points are fine. We'll keep that. targeted, we'll hide that. Okay, so right now we have this supply, this swing low, that's the leg, and now we're getting the corrective pullback. It's a corrective pullback until we take out the high, right? The extreme high. So right here, what do we see? Same kind of way that we were labeling price earlier. This area is what? This is the point of reversal. This is the extreme that broke structure. We get a candle body closure above that POI. So to me, that's a sign that this now became weak and targeted. And so that's a clean reversal. On a 4-hour time frame, that's very strong to me that we are now bullish, right? So higher time frame order flow is shifting bullish. Now, what do I see here? So we get this high. Where's the pullback? I can see a little pullback here, and then we form this wick, and then we push back lower. And so what I'm seeing is a couple things here. Well, let's look at the market structure. These points, each one of these points are going to basically reference a swing high or low. So from this low to this high, that's one swing. From that high to this low, another swing. This is basically what I'm using this for. And so use that as guidance. This is going to be very helpful in this video, right? Let's delete that. So for me, the swing low to the swing high, I'm now expecting a pullback. This area, we see a pullback. And because this area failed to do what? Obviously, we have a reversal. So price is now showing bullish intentions. But because this wick did not obviously break the swing low, right? It could have been another reversal. If we saw this happen, that means that this area would be strong because it would break the swing low. And because this is one big swing, that's a lot for price to have to do. But because this very clearly did not break this low, to me, this now makes this a weak high, right? And so you can see the price from this high makes a temporary swing low down here. And this swing low does what? Reverse and pushes price back up into this area. This is what? A potential supply. But what do we see? This area, this extreme, did not even take out the high. So we did not have either this one did not break this low, right? And then we have this low did not break this high. And so now we have two weak levels. Neither of them broke any of those structures. And so now what we see is we're having maybe some sort of complex pullback between this low to this high. And so until this high goes, we're not completely confirmed. So I'm waiting for some more clarity, right? And I know that the high is going to go because it's weak. And I know the low is going to go because this failed to make a new high. We're trading between these two levels. So price pulls up, respects the supply in here. We can even draw this out if you want to make it a little bit clean, right? We're just going to go like this. I'm going to use the wick in this case as the supply, right? This supply pushes price lower, and then what do we have? Break of this weak level. And so now we have this swing from this high to this low. This is the reaction we respected, right? And then we broke internal structure to the downside. Now, because once again, hold on, I have to plug in the computer. All right, I had to just plug in the computer, so we're back. So because this high was not responsible for breaking the swing low, we're waiting for a new swing to develop. So basically, now that we've confirmed that we are potentially shifting bullish through this candle body closure here, now we are expecting a what? We have this, this was a lower low. We've now made a higher high. We're expecting what? A lower high, a higher low, then a higher high, then a higher low, then a higher high, right? That's the expectation. So we know what we're expecting. So for me, I would really like to see this weak high taken. And because it's a weak high, because it failed to take out the low, I can still see that we're still a little bit bullish. So I'm waiting for a pullback that's valid. Now, ideally, I would want to see price to pull back into what? Discount territory. Now, it doesn't have to, but it should, right? And so here we have this low to this high. And let's see if I can change the color here so it's maybe a little bit more clear. That would be the wrong box here. Range, nope. Let's see. I might use the fib tool for this one. This low to this high. 50% equilibrium. Okay, well, that's fine. So this is below 50%. So I would like to see price come back into discounted pricing, where it's cheap to take price higher. So at this point, since we have this high that's weak, this low that's weak, I'm waiting to see price to come down below this area. So price makes this swing low here, and what do we have? This area is actually the low that's responsible for breaking that high. And so what that becomes is what? We're currently at 50%, so we could consider that, let's say price is now came into discount territory, and so this area, this is a swing low, and this low breaks the high. And so what does that show me? Well, if this area broke structure in continuation to the expecting a higher high, now we know that this area is protected and it should not go. And so what do we have here? Price is pushing up. Here we can see that price did wick very aggressively, but it did not violate the extreme wick here. So this area just came back to tap and mitigate this level. And very aggressively it pushed higher. Tapped back into this supply, but we're expecting the supply to be weak because this whole area is weak, and so we're expecting this to be targeted, right? So we break structure to the upside. Here we make this high, and this high does what? It's pulling back. And all the expectation is that we are not going to violate this demand zone. Now, what do we have? Price comes in, and you can see that the candle body closes here, but we do get price traveling a little bit lower and makes a small wick below. So we could take this as two things. Well, price could just be coming in to get better pricing because we know that we kind of haven't really tapped deeper into the 50% zone. So this could just be a better tap into discount territory, right? The other thing is this could also be a sweep. Now, if we look up here to the rules, what makes an area weak? Well, we could say that an area that's weak is when price wicks through that area. But we could say we need confirmation through candle body closures. So while this demand could be weak or weakened by this wick, it's not actually confirmed that we are bearish because the candle body closure doesn't close beyond the low wick, right? And because this is a strong area that broke structure to the upside, this, while it's swept, should still hold. And so when we see that price is continuing higher and we get confirmation that this strong level was not invalidated by this high did not break structure downside, it just swept it. What that tells me is that this high is now weak. There wasn't enough sellers here to push price to invalidate this point of interest. Just sweep it. And so I'm going to expect continuation higher for a higher high. This is now a what? A higher low, right? Now what happens? We get price pushing higher, and here we have what? A break of structure to the upside. We make a new higher high. Now what we could see is we left behind a point of interest. Now it's up to you on which ones you want to highlight, but any area that is responsible for breaking that structure. So this is the weak high. Where can we see volume, high momentum and volume injected into the market? This sell to buy, this that gets engulfed, to me, shows a lot of volume and momentum enter the market. Tons of buying happened here. And so this is the area of demand for me that is responsible for that break. Now, at the same time, we could also say, well, technically the supply wasn't broken by this area. We did get price come in to tap. We did give a reaction to pull back and then continue higher. So you could say, well, this could be an area of demand, right? And this area could be specifically responsible for that break of structure. And you would be right to do that. In fact, you could even get an entry from here, take the 50% equilibrium to make a new high. But we're not going to focus on those kind of entries right now. We're focusing more on entries on a 15-minute time frame, right? But this is a point of interest that's totally valid. In fact, this is the strong area that broke structure because this low here was very weak. This caused a sweep. And here you can see that price kind of struggled a little bit to go higher. We didn't get very strong order flow we didn't get a strong injection of momentum until we came from this demand. So for me, this is the area I'm focusing on. This to me is a strong level that broke structure to the upside. And so what's the continuation? Well, I would like to see price pull back, right? And so if we're going to, let's say, continue higher, then I want to see price come down into my below discount territory. So it'd be below the 50%. Once we form this new high, we did not travel back below to discount territory until here, right? Until we pierced that area through here, and then we confirmed through that demand, right? So that's just an idea. So here we have this higher high, we have a higher higher low, higher high, higher low, higher high, higher low, higher high. Here what do we have? This area broke out of this strong supply. And so when we came to tap the supply here, you could have said, okay, if the higher time frame supply is strong, it could hold. And I would be looking for a point of reversal. But because all of the levels to the left broke structure and made higher highs, technically, these areas are all strong. So let's label that properly. Strong bottom made a new high, right? This is a strong bottom that made a new high, right? Then what do we have? This strong bottom made this high, price pulled back, same thing. You could say this area here. This strong bottom made a new high. And so until we get price breaking a strong level, there's no reason to get confirmation that we are bearish, right? So up until this moment, while the supply may have been strong and unmitigated and responsible for breaking structure downside, there's no confirmation that supply is going to hold. And so once we tap into it and we continue to make new highs and the strong lows are being respected, they're breaking structure to the upside, there's no reason to take that yet. Now, internally, we could see that, well, actually this high broke structure to the downside internally and took out 1, 2, 3 strong levels, right? But we also know that what? Well, we want to see price come into what? Into discount territory before we get a buy. And it's expected to see price be bearish temporarily until we can do what? Until we can get more orders to continue to the upside. So I can also say, while this could be an area to capture shorts, which, you know, once we break this structure to the downside, I could say, I would like to see price come back to this area, and I could have taken a short from this supply, right? But what do I also see? Well, the extreme, and that's why the extremes are important, the extreme or the external areas, let's say this level, right? And this is let's say a decisional point that broke structure. This area here was not broken by this high. So this high pushed lower, right? And while we did take out liquidity from here, we did fail to break the strong level here. And so what we're doing now is we're pulling back up. And so what this is telling me is what? Okay, well, let's see what happens as a result of this. We are expecting higher highs, right? This could have been a sweep, but because this demand or this pullback here failed to do what? Let's mark this as such. This area failed to take out this high, right? And so what that tells us is what? Well, this area failed to take out the low, strong supply, right? And so that means that this is weak. But this pullback failed to take out this high, which is also weak. So same thing as we did back here. Price has to pull back a little bit lower to get into a better pricing, right? So we know now that, well, the high has to go, that's still expected, but this low has to go. So you could catch a lower time frame short from here, targeting the better pricing at this demand level, right? Price comes down lower, taps, gives it a little reaction, but doesn't take any strong levels, taps, and in here, we could actually see maybe we could find an entry. So let's give an example here. So this would be, we have 2 levels. We can give example 4 and 5. So let's go into this one because I skipped that last one back there. So this is going to be the area that we focus on for example 5. So price comes into what? This strong demand level. Let's zoom into that and see what's happening. So now we're going to go on the 15-minute. So let's say the 4-hour demand is strong. It broke structure to the upside. So when price comes back into that area, we want to go on the lower time frame to see what's happening, because maybe we can get a really clean entry, right? So this is the 4-hour. This is the 4-hour tap right here. So this is the first tap. So let's look at what area gave the pullback and the continuation that tapped into here. So to me, this is where we get a lower time frame sweep. You can see that we swept the candles to the left a little bit. and this area was the high. It's a buy to sell that broke structure. So I marked out, and you can see the points again for market structure to clarify what I think is important. In this case, we'll clear these levels because those are from the higher time frame. So this is a strong level of supply. You can see that we make this low, and this low does not break this high. So until we get candle body closures, we're not confirmed. Now, here we got a sweep, which is what? It's showing that this area is maybe a little bit weak, right? But because we didn't get a candle body closure, we don't have a clear reversal back to be bullish. So price is continuing, we're ranging in this area. We have this high, this is basically what? A lower high than the previous high. And then what do? Price wicks down below. This isn't a break of structure to the downside, but it is showing us that price is kind of weak on the downside, right? So this is strong because what do we have? Confirmation. Broke structure downside. Now what are we expecting? This area is weak, but we don't have confirmation really because we have not taken and closed below the weak. So our price pulls back up a little bit more, and then we have this area. This is a strong level. This is where the supply that broke structure to the downside and got a candle body closure below the weak level. So this strong supply broke structure to the downside. And so what we're expecting is, unless this area gets ran through with a candle body closure, we don't have a clear reversal. But it gives us a change of character. The wick basically shows what? Well, it shows some weakness here, kind of same as before. We wick through this strong level, and that's showing us that it could be a little bit weak. Let's see what happens. So price here, sell to buy. The buy breaks out, takes out the strong level that broke structure to the downside. We might want a little bit more confirmation. So we make this high, we pull back, more to the upside, right? So now we're what? The highs are looking to be potentially weak. This is weak. This area is weak. We're breaking structure to the upside. This is one swing from here to here. This is a pullback, new high. We get a pullback that doesn't violate this last one, new high. And this area, what do we have to come back to? To this demand, right? And so what kind of entries could we get from here? This is example 5. So we could do this. Well, now we've tapped into a 4-hour demand zone that is a strong demand zone that broke structure to the upside. Now we have a strong 15-minute level that broke structure downside get ran through. So this is now a point of reversal for me. Anywhere inside this entire body could basically be the reversal point that I'm looking for because it's pretty big. In this case, what I'm taking is the wick in here, so from here to here. And now I'm looking for a potential entry. So when price is rolling back over, I can expect that what? As long as that this high did not break this strong low, because this strong low is the extreme that broke this strong high and this strong high. We took out 2 levels here. As long as that this pullback does not take out this level, this is what I'd like to see taken out. So when price comes back into this demand zone, we buy in. And I can just mark out the entire area. So this is the entire demand zone that I would like to protect. Price taps, and what do we get? Continuation to the upside. Until this level is taken, right, we don't have super clean confirmation, but we also know what? We know that the high is weak as this high failed to break the low. If it did break the low, then we were wrong on the direction of the market. It was not going to give a reversal, right? A continuation to make higher highs. The higher time frame order flow is we're in a bullish area, right? We're in a corrective pullback, so the pullback should continue until we tap a higher time frame supply. So this is my first entry, and then what do we have? This is another demand area that did what? Continue and break structure to the upside internally. You could say that here, this is where we get our shift. So this area is a low, created a low, pull back, and then this is where we break structure. And now we're continuing, same thing as we saw earlier, we're taking the highs. High, pull back, take the high, right? And so I would like to see price come back into this area. This is the last point of demand for me. When price comes in and taps, let's say we get an entry here, we get confirmation when an area that's responsible for creating that on a lower time frame like this This is what? Pull back, broke structure to the downside. Pull back, take structure to the downside. Here we have these two areas that broke structure to the downside that were strong on this internal structure that did what? They were both taken. And so that's giving me more confidence in this. Now, what would I like to say about what my target is? Well, this is a 15-minute entry, but I would like to target what? The 4-hour level. Because I know that the 4-hour is now bullish, considering that we did what? We got a reversal point and we're now what? We're making higher lows and higher highs. I'm expecting this to be a what? A higher low and to make a higher high. So my trades are going to target the weak 4-hour high with a 15-minute entry. One of these is a 15.6R trade with 7.5 pip stop loss. The other one is a 8.94R trade with a 14 pip stop loss. And that's pretty clean, right? That's on the 15-minute, right? So that's one example. Now let's look to the left. We had another example in here. Let's see. That would be here. So what happens here? This area, there was a strong demand that broke structure to the upside. Price came back to this area. Now it swept it. And so it could be easy to get confused there and get lost. But we did get what? That we have to get confirmation of reversal. And we didn't get that confirmation. Because in this case, price only wicked through that area. So it only violated it, but it didn't invalidate it. It's important to keep in mind. So now let's look at this area here. So let's see what we saw here. So on the 15-minute, on the 4-hour, although it was wicks, right? But on the 15-minute, what can we expect? When we break structure, we are expecting a pullback. A lot of times that's what happens. Now, because we did break structure to the upside so strongly and we took the weak high, we expect that this high is also weak, right? And so what we can expect is because this area on the 15-minute, while we did candle body closures here, on the 4-hour that didn't happen. And so if we break structure even on the 15-minute, if we get signs of getting a reversal, that could give us confidence that now we are in a pullback at least, right? And so, you know, because the higher time frame is bullish, to me, this is just a sweep of liquidity on the higher time frame, and I still will expect price to continue higher. So let's see how I saw this here. Example 4. This is what I saw here on the 15-minute. So here we have two levels. Price makes this low, we pull back, this breaks structure to the downside, right? This is basically the high of this big swing. You could also see that here we have what? Price creates a doji candle. We have this area where we paused and price broke structure even lower to the downside. And we did so with some momentum and volume by the size of these candles. And here you can see some imbalance. What happens is we make this low, price pulls back up, and for some reason we decided to what? Take out an area that was responsible for forming a new low. And so to me, this is previously strong, but because we run through this area and we get a candle body closure through it, that's telling me that, well, likely we could see some sort of reversal here. Then what happens after that? Price makes a high, higher high, and then what? We fail to make a lower low. So this could tell me that, hey, we've failed to make the expectational order flow. Instead of making a lower low, we've now made it what? A higher low, right? And we've now taken out 1 point of, let's say, one strong level, right? That could be considered protected. So technically, this could be considered strong. And that might be happening, right? Now, well, we're going to wait for price to develop, right? So strong bottom, break structure to the upside. We get a pullback. And this pullback fails to break strong structure and basically fails to break the strong low, and it takes what? Another strong high. This area here is violated, and so we're getting signs of a reversal here. And so, let's say this area here, let me just go to the wicks. This could be my area of demand, let's just say. Price from here breaks structure to the upside, but what do we have? What area caused that? Well, here we have a sell to buy that's engulfing. Here we leave behind a big wick, and this wick swept the candle previous to that and mitigated the 50% of this area. So this area shows to me it's the extreme of the 15-minute. So this is pretty extreme. This breaks structure to the upside, so it takes out one level, two levels, even takes out maybe some higher levels in here. What do we have this area here? So what I'd like to see now is what? a couple things could happen. This area will break the strong low and then continue to the downside, which shows me what? That we are going to continue bearish and go lower, right? Or it's going to fail to break this low. And so I would like to see that this area is basically ran through to get that confirmation. Even if we don't get price coming back to the extreme, this is a new weak to strong area. And so what I'm looking for is the extremes. So we have this weak level that we get a pullback from. We don't know it's weak until it's ran through, right? So price pulls back, and what happens here? We create this level here, and this creates another pullback higher. And so the swing to the downside here, because this high failed to break what? The lows here and did not create a lower low, what that's showing me is this is going to be weak because this is not strong enough to break structure to the downside. And when this area is responsible for breaking the upside, breaking this high, that automatically will make this area a strong level. And so I'm looking now for point of interests that are responsible for breaking that structure. So I could say that this area is one. This is a sell to buy engulfing, right? And here you can see that we had left behind an imbalance. Very strong indication of high volume and momentum, shifting price bullish on the 15-minute. And you can see we get continuation here. This is very corrective and doesn't look very clean to me. But then what do we have? A sell engulfing right here. We pause. And then what do we get? Price comes down, sweeps the liquidity in here, but taps to the left, another area here that could be an area of demand, right? As this is the low that broke this weak high. And this area is what's responsible for pushing price higher. Now here we have a sell to buy that actually was responsible for taking out this level. So this weak level was violated from what? Where was the last sell candle prior to that area? Looks like right here. So what we could do is we could say, well, let's take an entry off of one of these levels. We could wait for price to go on a lower time frame, like a 5-minute to give a reversal, or we could just set buy orders here, considering that what? The highs are now weak and the demands are now strong. And so let's say here we just set an order. So this is what the entry would look like. Off of this one is this broke this structure. We have liquidity here that we're going to sweep. Price comes up, does what? So here we form a level. This is an extreme. We swing low. And the expectation is what? Well, if we want to be bearish, this has to take out what? A strong level. As long as that doesn't happen, we're fine. Now, if you wanted to take a very, let's say, safe kind of trade and you wanted to take out the entire level as in consideration, you could say, as long as it does not violate this strong level, we're fine. You could do that. Or you could set one order at each of these, for example, right? Because this area did not break structure to the downside and did not take any strong levels, the extreme, this is weak, right? And so now what are we waiting for? We're waiting for this level to get taken. So this is an area of supply, pushes price lower, taps into this demand that broke this weak high. And what do we see? Price, this is the last pullback that broke structure downside internally. Here we tap, price pushes back up into the supply, forms an extreme, and then what? Takes this strong internal supply. This is a strong high that breaks structure downside internally, and this gets taken. And so here we get clean confirmation that, hey, we're definitely shifting bullish from this area, and this is a pretty good trade. Price comes into this supply. We get a pullback. This pullback obviously doesn't break anything. It just continues, and we run through this weak high. And so this is a 15-minute entry targeting what? Where's the 4-hour level? Well, we had this low to this high, right? This area is weak because it did not break and close below this area. We actually got an entry, and that entry is safe, and we're going to target this high at the minimum, right? You could also say, well, I want to target this supply because there's no reason to go bearish at least until we tap a supply level. And you can see that that trade could easily become a 21-hour trade, right? But if you want to be safe at the very minimum, the best bet you can have to be safe is targeting that weak level. And that's a 16.6-hour trade, right? So that's how we got that entry. Let's continue here with the other examples. So we're on the 4-hour still. We already gave the example. We have one here. We gave one here. So every time we tap into these higher time frame strong demands, we can get entries, right? And so what happens here is we push price higher, we take out this area here. Now on a lower time frame, right, this is like internal, but this is technically what? This is technically strong. A strong top that broke internal structure downside. Now, in many cases, I prefer to use the extremes, and that's the only ones I'm going to really draw on the chart, the extremes. On the lower time frame, I might just have like a solid line to give me an indication that we're shifting. And so we could say like, we'll use this red line. That gives me the change of character. So this area is responsible for breaking this area that's basically a strong high that breaks internal structure downside. Now this area has become strong as this one broke, right? And it's in this demand level, so this is a little bit more higher confluence to me, right? And now that we're getting this reversal in here, that tells me what? Well, we know that this area, this high, did not break this strong demand level. And so this area is supposed to be weak, right? It also failed internally on this area, right? And this area is technically internally strong because it did break internal structure, but it did not break this swing, the strong demand level that's the extreme, right? So price here pushes higher. This leaves behind some demand. Price comes back, taps into this demand, and then we get price pushing higher. Let's see where the next example is so I know where we're going to. That was the 5 entry. I have 6. It's all the way over there. Okay. So anyways, this area here, we leave behind a 4-hour demand that gets engulfed. To sell the buy, engulfing. Volume and momentum are injected into the market. Here, you can see we have all of this imbalance left behind. And what do? We take a weak high. Price makes the extreme of that leg, of that swing. We're getting a pullback, right? And because we're bullish, expecting order flow, we are not what? We are not expecting the lows to get taken. And this is a strong extreme low. Swing high, swing low. This is the dots that show us where structure is internally and externally, right? Pull back. This one fails to do what? To put in a new high. So we continue, we pull a little bit back more. Here, this is what caused this break of structure to the upside. So this is a demand. This is a sell to buy engulfing. Draw it out to the right. And now what can I expect? Well, I could expect that because we broke structure to the upside and we're not tapped into a higher time frame supply yet, the supply is still higher. I would expect that price, when it comes down to tap this demand, breaks structure to the upside. And it does internally, but we actually don't get a new high. So this weak level actually doesn't get taken. And so what we have now is we have a weakness on the side of buyers. The buyers are not as strong at this moment from this level of price to break and make a new high. And so while you could have taken a trade from here and you would be in profit and you take out this internal high, you know, maybe if you had your trade set to break even, that's what would happen. You'd hit break even. But here, what do we have? We end up having this area. We fail to make a higher high. And so this area is weak because it does not take out the strong supply. But this area is now doing what? It's showing some weakness on the buyer side. And sellers actually overpower. They're stacking sell orders on here. And that's why we leave behind such a big wick. And this area with power, volume, and momentum pushes to the downside. We get a little reaction. But then what do? We end up taking strong structure. So this area that was strong, the extreme of making this new swing leg up to the upside, was just ran through. And so this now becomes a point of reversal where the higher time frame shifted bearish and began targeting strong demand and is creating strong supply. So now we have a couple things. We could say, okay, well, this is the extreme strong level that broke structure. This is one big swing. We have this low. Price pulls back up, and what do we have? At this moment, because this area is not responsible for breaking this swing structure, we didn't take out this high. This area is currently targeted because if we got a point of reversal, now we know that, well, the lows are going to be weak and targeted, and the highs are going to be strong. And so when we get this exhaustion of pullback up here, right, that to the left maybe taps a supply level that is responsible for breaking structure. As you saw, we paused here, and this is what got engulfed, this doji candle. So we could mark that out here. Price comes in, taps, respects that supply, and breaks structure downside, taking out this weak level. right? Here, what do we have? Price break structure downside. We get a little pullback in here. Price pauses and continuation to the downside. Pause, pull back, continuation to the downside. So now what do we have? Well, we have strong levels here. We could say what? Well, we have this area that will continue to the downside. We could say this is technically a strong top, right? We could also say that we have an internal strong top down here, this area. Now the areas that we pulled back from are not very clean, right? So we pulled back here and very wicky here, still making new lows. So it wasn't very clean, but we could still use this to be something that we would trigger if price maybe gave a reversal. In this case, this area causes price to push higher. This is where we get the actual pullback from. As long as we don't violate this area, we are still basically, as long as we don't violate this area, we're bearish. As long as we don't violate this area, we're bearish, right? In this case, what do we have? Price pushes up, we tap, we give a reaction. The reaction sweeps structure and liquidity from here, forms an extreme, and this ends up forming a flip. And this area is responsible for the break of structure to the upside, right? And so what do we have here? Technically, on the lower time frame, this is kind of strong. And the reason why I'm not going to drag it out across is because until we confirm the extreme, it really isn't completely strong. So this area did break this area here. So maybe this is an area where we can catch some buys from. Price comes in to tap this supply zone. We get a reaction. This reaction doesn't take out this strong level yet, right? So we get a pullback. Price pushes higher, sweeps again the initial reaction, gets a deeper mitigation above 50%. And what do we have? A reaction that's very aggressive that pushes price lower. But because this area is failing to take out this area here, this demand, this strong demand, at this moment, because if that continues, if we don't take out this level, this area becomes weak, right? So let's go on the lower time frame to see what happened in there. So in this flip zone, we would expect price to potentially give us a reversal, considering the fact that we already broke through 1-2 strong levels. And so maybe we have a trade in here. And this is all without refining the point of interest on the 4-hour, right? Example 6. So here, what do we have? This area is where we got a pullback, continuation break structure downside, right? So this area, this gave the pullback here. Let's say this area was weak, right? This area was strong as this broke structure to the downside, right? Price forms a new low here, and we get a pullback. This pullback here, the expectation is what? New low. Because we failed to make a new low, and we only wicked down this area, but no candle body closure came here, what we now see is that, well, this reaction that we got as a pullback is weak. So we have to push price higher, even if it's only potentially to this supply, right? Price could do that, and that might be it. After this, maybe we go short, right? So because this is weak, I would like to take price long to take out at least, or to come back to the supply, right? So what do I see? This area, we have a sell to buy candle. This doji candle gets engulfed to the upside. This is the extreme, right? And so what do we have? Then price pauses in this area, which is a supply. We give a little reaction, and then we push price higher, and we break this weak high. And so what that makes it to me is this could be a confirmation that we take this weak high, that we could travel higher. Now, if price pulls back into an area responsible for that break of structure, then maybe I would like to take a trade. So I could take a trade from the extreme or the decisional that took out this weak high, because now I want to see if I can test this level. And so maybe my entry looks like this. So I could set one entry here, and I could set an entry here, right? In this case, now obviously the way I trade is I go down to the 1 minute time frame and I'll trade off of a confirmation. But on the 15-minute, it might be a little bit harder to get your confirmation sometimes. Technically, this did break structure to the upside. This is area we had a pullback, right? We make a new high, we pull back, we make a new high. This area is candle body closures above. So for me, this area here, which is where we caused a sweep into, and we tapped and we respect this area, this is where we have a pause. Technically, you could say this wick is the area of demand, sell to buy, right? And we tapped here a couple times. And so you could take a trade like this off of that level, and this gives you a 5 pip stop loss. And then obviously what? If we're targeting potentially higher time frame, we might target a supply, right? In this case, what do we know? Because this is a flip level, we were expecting probably a buy from here. And because this level is an area that failed to break the flip or the extreme strong, right? Now, if it did break this strong level, we were wrong on the entire direction of the market, meaning that we were going to have to make a new low. In this case, that wasn't what happened. And so we got signals of reversal on a 15-minute time frame, and we took a buy, and this buy is targeting what? A weak supply that failed to break the strong area. And so this area here is 18.72R, and look how clean this is. This area ended up sweeping, tapping into the right here into the body, the bottom of the top of the range, and then took price higher and took out this weak high. And so that's how you can see how you can target weak levels. And so that's another example that we have there. Let me get rid of some of these things that I've just recently drawn on. And I'm going to hide these a little bit. Just going to show the entries. Let's see, all of this stuff. So let's recap really quick on the 4 hour here. So let's do this. I'm actually going to drag these out a little bit just so you can see. Okay. So to recap what we're trying to go over here in this video is really meant to simplify trading and to show you how you can simply use strong and weak levels as your justification for taking trades, right? So an area that's strong is going to break structure. And so when price comes back to mitigate a strong level and it gives you a confirmation on a lower time frame than the one you're using, you can take a trade with confidence there. And the idea is if you're using your structure on the higher time frame, so if our structure is on the 4 hour, you can target 4 hour levels with a 15-minute entry or a 5-minute entry or 1-minute entry, right? And so this should take a lot of the guessing away from trading. The idea is who's in control. And the idea by who's in control is who is taking levels and leaving behind strong levels. And my confirmation for me is as long as I don't get a candle body closure opposing or invalidating a strong level, it's still valid to me. And so hopefully this video clarified a lot of things. Remember, identify a point of weakness, find the point of strength that ran through that area of weakness, make sure that it's an area of high volume continuation, and you want to basically create a zone of that area that caused the high volume continuation, which is what your supply or demand area is going to be. And then once the continuation fails, we identify the point of reversal. And once you do that, you want to make sure that is the higher time frame story. Are we higher time frame bearish? Because if we're higher time frame bearish, we're only doing a bullish pullback until we get into a higher time frame supply that gives us a reversal trigger. And at that point, you look for, once again, your reversal point. Once you get that reversal point, what does that look like, right? So hopefully this video clarified a lot of things for you. If you have any questions, leave me a comment. If you want the trading view picture or of the diagram that I've drawn, it's going to be linked in the description. And see you for the next video. Hopefully you like this one. Have a good day.